Hello, everyone. Welcome back to the Fire Chat. And we have a great audience today. Again, we have an audience from all over the world. Thank you so much for joining the second Fireside Chat on ADDA. I also take this opportunity to thank my colleagues and my department at California State University, Sacramento for supporting these events. I decided that I will not introduce Mr. George Botic. He is the Director, Division of Registration and Inspections at PCAOB. What more introduction can I provide? Welcome, George. We are privileged to have you with us. Thank you for joining us, and it is so nice to see you again. I guess it was about 2 years back that we had a similar event at our campus, and that was the first time I had met George. Shall we start, George?
Yes, Partha, and hopefully you can hear me, but thank you for the introduction. It's great to see you, and great to be a participant in this event, the series of events, as I understand it. As you said, it was about 2 years ago, maybe 2 years and a couple months ago now, that we first met on campus, and it was a great experience that I had seeing the campus, meeting you, meeting your colleagues. So it's great to be back again, virtually, albeit, and participate. I certainly always welcome the opportunity just to pick up maybe your introduction to talk about our inspection activities at the PCAOB, and in particular around the topic. And during a time, I would say, where there's rapid change within the profession, as you and your colleagues all well know, probably better than I, the speed of change within the profession through technological advances. So certainly a great topic, a great time to talk about it, and certainly pleased to be here.
Thank. Shall we start, George?
Yes, please. Whenever you're ready.
Okay. And so before we start, a couple of housekeeping items before we start this conversation. Please keep your mic muted at all times. Now, in the Zoom times, you already know all these rules and regulations, but just to repeat it back to you. Now, we will take the questions from all the participants in the end. You can send the questions via the chat. We will try to take up all the questions, but as we have a very large audience, we may be forced to skip some. So I apologize beforehand if I am unable to take up any question. I also want to let you know that this is a recorded conversation. Okay, let's start the conversation on accounting data and data analytics and innovative technologies in accounting. So, George, for those who may not be familiar, as you know, there is a large international participants among us now. Would you mind providing a quick overview of the PCAOB and its responsibilities?
Yes, Partha, we'd be happy to do that, and that's probably a good foundation to the rest of the discussion, particularly with the large international participation, which is great to see as well. The PCAOB, just to kind of start at ground zero, if you will, very quickly, the PCAOB was formed by the Sarbanes-Oxley Act here in the U.S. in 2002 as one of the key components of the Sarbanes-Oxley Act. And the overall responsibility of the PCAOB is to oversee registered accounting firms and associated persons who provide and issue audit opinions, independent audit reports for publicly traded companies, or what we would call issuers. I know outside the U.S., these are probably PIs, or listed PIs, if you will be probably the term. The PCAOB, broadly stated, is responsible to oversee the audits of public companies and SEC registered brokers and dealers in order, and this is the key phrase, if you will, to protect investors and further the public interest in the preparation of informative, accurate, and independent audit reports. So our mission is very simple in my mind. It's investor protection. Now, I should say before I go on that the remarks and comments I have today are my own and don't necessarily represent those of the board, individual board members, or staff members at the PCAOB. The PCAOB, by statute, has four primary functions. First, We register accounting firms, we inspect firms, which together is the Division of Registration and Inspection. We set standards, and then we have an enforcement or investigative arm. Just to touch on each very quickly, to give context, registration is the first step. Firms are not required to register unless they do or they would like to issue opinions on publicly traded companies or registered brokers and dealers. Then you have to be registered with the PCAOB. Otherwise, it's a voluntary process. From a broader perspective, we have two types of firms. We have firms that issue opinions, whether it be in the U.S. or be foreign private issuers, FPI opinions, if you will. But the rules of the Act also allow for and require the registration of firms that play a substantial role in an audit. And this comes into play in group audits or multinational audits. We currently have, in terms of broad numbers, just a little bit over 1,900 registered firms with the PCAOB, so a little bit under 2,000, a little bit over 1,900, of which, and this might be of interest given the audience, Partha, about 850 of those firms are located in jurisdictions outside the U.S., and they cut across roughly 85 different jurisdictions. So the reach of the PCAOB is global. We have, and I'll touch on this in a second, we have international or non-U.S. inspections that we do every year for firms outside the U.S. that issue opinions on U.S. listed companies. So that's registration. The second phase is inspections. From an inspection perspective, which is the bulk of our staff at the PCAOB, our inspectors or work on inspections. Our inspections assess registered firms' compliance with relevant accounting and auditing standards, professional standards, SEC and PCAOB rules. Within the statute, there are two categories, very simply, of inspections of issuers. First are firms that issue over 100 opinions in a calendar year, and they're required to be inspected annually, what we would call annually inspected firms. Currently, this year in 2021, we have 12 annually inspected firms. That number does vary a little bit. It has the 6, if you will, major global accounting firms, the big 4 plus BDO and Grant. And then within the U.S., these are all domestic. There's a number of firms that kind of bounce, if you will, above or below the 100 threshold. So some years it may be 10 or 11. This year it's 12 that are annually inspected. For all the other firms that issue 100 or fewer opinions in a given year, those firms are inspected on a triennial basis, or at least once every 3 years. We can do them more frequently, but at least once every 3 years. In total, just as one more statistic, if you will, that might be of interest, on an annual basis, we're inspecting somewhere in the neighborhood of 160 to 170 U.S. and non-U.S. firms a year. We also inspect under our current interim inspection program, registered brokers dealers on a year-over-year basis as well. One kind of point just to mention, given the current environment with COVID, all of our inspections are remote. We were remote last year. We're still remote as we sit here today. Hopefully, don't know when, but we'll be back to, I'll say back to normal, if you will, in the not too distant future, traveling and all that. But right now, we're still doing inspections remotely, using Zoom or other WebEx, other software solutions to conduct our inspections. I will say things have gone, I think, overall gone quite well last year and this year. Where it has been more of a challenge is on the non-U.S. side. In our interactions with our foreign counterparts, other regulators, as well as transfer of personal information potentially, that has made it much more challenging. So the numbers last year and this year will be lower than normal, given the challenges doing remote non-U.S. inspections. Just very quickly to touch on the last two pieces of the PCAOB's 4 areas. Third is standard setting. We have an Office of the Chief Auditor, as you're probably well aware, that issues standards or other guidance to firms. Probably the best known, I'll say, guidance standard, if you will, is our CAMS, our Auditors Reporting Model, our Critical Audit Matters, which came out a couple years ago. CAMS with a C in our case in the U.S. And then lastly is enforcement. Last but not least, enforcement at the PCAOB is separate from inspections. I know some of our non-U.S. counterparts, that might be a commingled function, but here at the PCAOB, inspections and our inspectors are separate and apart from our enforcement division. The enforcement division conducts investigations. They have the ability to to sanction firms, provide undertakings or require undertakings of firms, et cetera, which we in inspections do not have. We issue inspection reports, is the output of our inspection process, and we have a remediation aspect as well, but we're not able or allowable to sanction firms, if you will, as enforcement does. So Partha, I'll pause there. And hopefully that's a fairly, very quick, I will admit, but a good overview of the key aspects of the PCAOB.
Thank you so much, George, for giving such a good overview. And yes, as academicians, we love statistics. So let's get into some questions related to analytics in accounting. George, generally, how does the PCAOB go about inspecting a firm's use of data analytics or other software audit tools in its audit?
Yes, thank you, Partha, for that question. During our inspections, broad statement, during our inspections, we are very interested and have been for a number of years now, and do focus on and understand how a firm uses technology as part of its audit. And obviously, our inspections, by the way I describe them, ranges from firms that are very large, global footprints, if you will, to firms here in the U.S. or outside U.S. that are very small. But in all cases, we do want to gain an understanding of what the firm is doing relative to technology. What we characterize is elements of technology management, our term, if you will. So we start with the technology management piece. Broadly stated, as part of our inspection, we'll talk to the firms about their governance of technology. Is it centralized? Is it something they're doing at the top, if you will, either domestically U.S. or maybe it's through a global process? Is it centralized, or almost is it the democracy, if you want? Folks can make changes or add tools as they go about it. So understanding the philosophy of the firm from a governance perspective. We'll want to talk about hardware, whether they're PC based or whether they're through maybe a global service center or a global server, if you will. The software, is it off the shelf? Is it internally developed? Is it done with a third party vendor, maybe a joint venture or partnership, like through artificial intelligence in some cases? So we'll understand how the software is the firm thinks about the software and how they develop it. Communications internally, how are the new tools made known to individual audit teams across the practice? Training that's provided. So if a tool is being rolled out, how do I, as an auditor in the field, know about it? How do I get trained on it so I'm using it appropriately? I'm considering all the risks around using that tool, as well as the level of experience that the folks using. Is it something that's used by specially trained auditors, or is it used by almost anyone in the firm? So at a broad level, Partha, that's where we start in terms of understanding the technology management, as we would call it. We then approach it both at a firm level, which we follow on from those questions, and then we look at it from an individual audit that we're inspecting perspective as well. So you might say, well, how does this impact our inspections? And it kind of depends, to be quite candid, is the answer. In a very simple environment, again, thinking more of the smaller firms typically, where technology is being used to manage documents, maybe perhaps trial balances or lead sheets, if you will, we would want to understand how the firm got comfortable that they have the complete set of documents, the complete general ledger came in, if you will, was brought over. An example of this might be journal entry testing. So a lot of firms use various technological tools, maybe not quite the more sophisticated ADDA tools as defined, but tools to test general ledger entries. That's kind of on the one side. On the other side are the much more sophisticated, so to speak, or well-developed audit data analytics or ADDA tools or applications. And in those cases, we would expect to see more documentation and have much deeper conversations about how the firm's getting comfortable with it. At the firm level, particularly on the more sophisticated side of firms, we would understand and read and assess documentation over the development, the internal testing, the user acceptance, and training around those specific tools. For example, we'll talk to national office folks. A number of firms have specific groups that are responsible for this, whether either it's a full-time basis or a part-time basis. We'll want to understand the quality controls that they put in place over the development and the implementation of the software tools. We'll evaluate firms' approach towards deploying in-house developed versus purchased or customized because a firm might purchase it, but then they do a lot of customization. So it looks more like in-house because they've customized it so much. Solutions and the controls that the firms have designed and implemented to ensure the integrity and the reliability of the output of the tools. Because at the end of the day, when you think about it from an auditor perspective, or certainly from a regulator perspective, we're focused on the output. So they use the tool, that's fine, that's great, but what does the output show, then how does that influence timing, nature, extent of audit procedures, and can the output can that be relied upon by an individual engagement team? Several firms, as part of this, interestingly enough, have implemented certifications or maybe recertification processes or programs that encompass the relevant quality controls over the software tools, again, to ensure the ongoing integrity and reliability. Because the worst thing, I'll say, in my mind anyway, is a tool's rolled out and Partha and I are the engagement team, the audit engagement team. Partha is the partner. We use a tool thinking it's giving us an answer. We react to that answer, and then lo and behold, the output through some sort of change that may have happened is a different output than we've made decisions and based audit procedures on a bad premise. So that's something we focus a lot on, is that change aspect. Certain firms prohibit the use of tools. This is also interesting. Prohibit the use of tools or solutions by their engagement teams that have not been nationally or globally certified, whereas other firms permit more of a local or regional approach, more what I call the democracy approach, that if someone develops a tool on their own, they can just roll it out and it can be used. In the case, so those cases in particular where it can be local or national, regional, we'll want to understand what the controls are specifically around changes around the approval process, again, to ensure the output is reliable and is what it's intended to do. We'll also be focusing on understanding policies and procedures that the firms have regarding how the firms monitor compliance with the tools. So how does the firm know that Partha and I, in my example, are using it correctly? So yes, we're using the tool. A, do they know we're using the tool? And B, not only do they know we're using it, but are we using it correctly? Is another piece of this we try to understand. From an audit perspective, now going down to the individual audit. So now we're doing an inspection of the files, if you will. We want to understand the engagement team's use of the tool, their testing of the information provided by the entity. Did they receive all the information that they should have received from the company? Do they have the full population that they intended to have? Is it fit for purpose? Do they have to go through a lot of what may be called data wrangling, if you will, to get the data in a format to be able to use it in the tool, and understand that process? And then what the output was, and how they use the output. And is the output consistent with other information the engagement team had? How do they consider it as part of their overall nature, timing, extent of procedures? I will say one thing quickly. Our approach, and this may vary by other regulators, but our approach to date has been not to open the box, if you will. So we're looking at the controls around the box, how the box was put into place, how it was maybe certified. We haven't kind of cracked the box open, so to speak, if you will, and said, okay, let's look at underlying code. We haven't done that. Now, I know other regulators I've heard maybe thinking about things like that. Our view is let's test the controls around how the firm is comfortable, how it's being utilized versus opening it up. That could change in the future, don't know, but that's not been our approach to date. It's interesting that, I'll just say this as I close, Partha, on this question. It's interesting when we think about the tools and how the tools have, and technology more broadly have reduced challenges to auditing, but it's also maybe not resolved or has created new challenges to auditing. Things such as ensuring skills and level of confidence and level of expertise around using the tools are certainly a challenge to using them. Other aspects, just quickly, is the company, is the client comfortable giving the information to the firm to do a full population test as opposed to samples? I know we've had discussions with firms that to varying degrees, and I think it's evolving over time, but at a given company, whether it's in-house counsel, whether it's the IT shop, whether it's the controller, CFO, if you will, they may have reservations just saying, here's 100% of the data, go take it and you use it in your system. So there's challenges with that. It may take an evolution to get companies comfortable with that approach. The other aspect I'll just mention quickly, I mentioned data wrangling. If a company has multiple systems, If they went through maybe a number of acquisitions, they've got multiple ERP systems that roll up to a financial reporting structure, but to break that apart to do various tests on using technology, that may be very complicated for the firm to get the full benefit of the technological solutions that they might be able to use if the data was in maybe better shape, so to speak, or more consistent. So I'll pause there, Parth. Hopefully that's helpful to the broader how we approach, how we've thought about it over the years.
That's great insights, George. Now, we kind of divide the auditing into different areas, even though there is a lot of overlap and all those things. But of these audit areas like risk assessment, substantive procedures, and test of controls, where have you observed the most usage of data analytics or software audit tools among auditors? Or can you provide us some examples of how auditors are using the tools in these areas?
Yeah, happy to, Partha. In the areas you mentioned, we're actually seeing broad statements, obviously, but seeing wide usage of technology, audit software tools across risk assessment, substantive procedures, test of controls. Maybe not quite as much test of controls, but we are to some extent. But really, the risk assessment and substantive procedures. The most pervasive usage of the tools that we've seen on inspections is in the area of substantive procedures, including both substantive test of details and substantive analytical procedures. In general, again, broad statements here, but in general, we see common usage in revenue and receivables, related receivable transactions, investments, and inventory. Those are probably, again, broad statement, probably the three most common areas: revenue and receivables, investments, and then inventory, where we see the tools. Just to give a couple more statistics, Parth, that might be helpful from your academic background. In terms of numbers, from the six largest firms, which we call the global network firms, the Big Four plus BDO and GT, we've observed over 160, using kind of round numbers, tools across the six firms. Of the 160, again, broad number, over 40 we would probably more likely classify as true data analytic tools or ADDA type tools, because the tools range depending how the firms classify them, from Power BI, Tableau, to much more sophisticated homegrown tools, if you will. Tools that we've seen, as I mentioned, we've seen tools used for for journal entry procedures, in particular, where the engagement team will provide parameters and information will be extracted from the company, and then individual, unique, or outlier type journal entries will be flagged for the engagement team. Another more true, what I'll call ADDA type tool being used by certain firms, assists engagement teams in performing substantive analytical procedures, applying predictive analytics using regression analysis, predicting sales by month or maybe by region, geographic, across geographies. So we see a wide variety. Now, if we come down below the major firms, speaking more from a U.S. perspective, for the other annually inspected, which we would call non-affiliate firms, the other annually inspected firms, we've observed over 25 tools being used across those firms that include a data analytical aspect to it. From the largest firms, you might say, well, are there certain industries or companies that tools are being used more extensively? The answer is yes. From the global firms, in our 2020 inspections in particular, but this is fairly consistent in other years, the most frequent use of tools that we've seen are in the consumer discretionary industries. In the other annually inspected firms, this is kind of interesting, financial services was the most common industry where we've seen the tools being used. From going back, comparing and contrasting between the size of the firms, the largest firms, we typically see the ADDA tools in the areas of, I mentioned, revenue, receivables, inventory, and journal entries. In the other annually inspected firms that are a little bit smaller, it's in the areas of revenue, receivables, allowance for loan loss, the allowance account at financial institutions, investments, and inventory. So there is some variability in terms of where it's being used most frequently. We do see that some firms have developed and are deploying proprietary technologies that aid in many of the audit procedures. Specific, Partha, to your question, to risk assessment, I'll touch on that for a moment. In the area of risk assessment, we do see technologies being used. One firm, as an example, used technology to execute risk assessments at the account level for revenue. The tool they use is used, for various metrics as period-over-period financial data, comparisons, and enable the auditors to visualize data using charts, graphs, and even using maps, same store sales, if you will, across a broader geography. The ultimate goal of the tool was to facilitate the comparison of financial ratios across an entity's industry peers, across the issuer's industry, looking for outliers or unusual trends in comparison to others, which may warrant and probably should warrant additional audit follow-up and audit procedures. We also observed another firm use technology for assisting, again, the area of risk assessment to identify period over period trends in financial data that present unusual fluctuations and, again, warrant further follow-up and attention. Now, I will say that the tools, even though I'm referencing them to risk assessment, in many cases are very versatile and can maybe used as part of the audit performing risk assessments as well as other substantive audit procedures. We've seen instances where tools are being used to test 100% of the recorded transactions. This is a full population testing versus taking a sample. And it's obviously pulling the information in from the client's systems to be able to use the data to do the analysis. One tool in particular that does this is able to produce a report and prepare audit documentation used in areas of auditing to test a three-way match for sales orders, shipping, invoicing of all recorded transactions. So again, some of the tools are very sophisticated and are cutting edge, more cutting edge. And I think if we fast forward, in my personal estimation, 3-5 years from now, this probably will start to become more the norm, if you will, of what we're seeing. Another tool we observed assists with risk assessments and substantive audit procedures related to the valuation of investment securities, enabling views by the auditor of the results of price testing, and easy to read or easier to read charts and graphs. In other instances, we observe tools that use predictive analytics using specific analysis to support a sustained analytical procedures, while others we observe perform detailed sustained procedures around trade receivables, payables, again, using specific general ledger information from the company. The one last example I'll provide, Partha, and I'll pause, that might be of interest. We've seen one example at one firm that used substantive test of details for revenues and receivables through means of an interactive data analysis tool that used client general ledger data to perform substantive tests of details through account correlations of revenue, receivables, and cash. And where transactions were not able to be correlated between revenue, receivables, and cash, they were flagged for further investigation. So I'll pause there in the interest of time, but there are a number of examples that we're seeing. Again, I think if we think forward, a few years from now, it will only increase.
Excellent. I know that you can go on, but definitely we also have the constraint of time. And let us move to something which is of interest to many of us in the audience, is about digital assets. And what has the PCAOB observed in the firm's audit of digital assets and the use of distributed ledger technology?
That's another great question. And to be honest, we haven't, at least sitting here today, we haven't seen a whole lot, I would say, of material, and the key word is material activities of public companies. That's probably another key point, of public companies in the area of DLT, distributed ledger technology, or recording of digital assets in our inspection work of the annually inspected firms. Now we have ongoing conversations, as you can imagine, with across the firms talking about this. We have for the last couple of years on what the firms are seeing from their clientele. Are there material balances of DLT? And yes, across the major firms, there are cases. We have seen it, but it's been very limited, as I mentioned. Interestingly enough, from a U.S. perspective, at a smaller firm level, we do see much more of material balances that are impacted by cryptocurrencies or other DLT activities. In those cases, we do inspect it, or we see it in its material. I think it's fair to say that we are focusing on it. We just don't see a lot of it at the major firms. We do have, in some cases, concerns about how firms, particularly the smaller firms, are testing the cryptocurrencies. There's obviously a lot of risk around this, as you can imagine. In some cases, the Bitcoin may be held in a pseudonym. It may be hard to assess who actually owns it, if you will, from an audit perspective. Valuation comes into play. So it's an area where we would encourage auditors, and have encouraged auditors to have a greater focus on making sure they have the right skills, they understand what the company is doing around it, before they kind of jump in, if you will, into the audit itself. But we don't see a whole lot of it at a broad brush, but we have seen it in some of the smaller firms.
Okay, that's interesting. And as a follow-up question, I would want to know, how does the PCAOB approach an inspection that may include crypto assets like Bitcoin?
Yes, and as I mentioned, where we do see it in its material, we generally inspect it, because it is a risky area. We're trying to understand how auditors are approaching these new types of investments or activities at various companies. But in addition to what we do, I'll take a small step back probably just quickly. At a PCAOB level, and you may have noticed about a year and a half ago now, last May, I believe it was, April, May, our Office of Chief Auditor issued a spotlight related to auditing crypto assets, because it's something we were seeing and have been seeing. Other regulators we know are focused on it, particularly in Canada. It's something we wanted to get some information into the marketplace to help auditors focus and be more cognizant, if you will, of some of the risk around crypto assets, cryptocurrencies, relative to an audit approach. Just a couple of things that we focus on, and these follow in line with that spotlight, truth be told. From a firm's system of quality control, we want to understand the firm's perspective on client acceptance, client continuance. If it's a new client that has material crypto asset balances, how are they thinking about the acceptance? Do they have the right skills, the right expertise to accept the client? If it's an existing client, but they merged or did acquisitions, or they've moved into a new line of business that goes into this space, again, from a continuous perspective, are they thinking about the skills, et cetera, and knowledge that the firm needs to have to be able to audit this work, audit in this area? Risk assessment from an audit perspective, it's a common theme, risk assessment, but from a risk assessment perspective, how is the engagement team thinking about the crypto assets, the cryptocurrencies? Are they appropriately risk rating it? Do they have sufficient understanding of the company's objectives in this space, the strategies, to be able to design the risk assessment, also the underlying procedures? I mean, related party transactions could be at play here. There could be fraud risks that come into play, given the nature of this, that the auditor probably should be thinking about. As I mentioned, when we see it, we do inspect it. Typically, we're focused on, from an inspection perspective, on valuation issues, existence issues. Want to understand how the auditor understood the existence. What did they do specifically to test that, to gain assurance over that, as well as the valuation issues. We've also gotten and seen matters around mining, and how individual companies are miners, if you will, in this space, and how the auditor gets comfortable around those activities as well. It can get quite complicated quite quickly, truth be told.
Thank you. We see a lot of these technological advancements now. So how are these observed technological advancements impacting audit quality? Now you are really in a good position to see all these things, or the changes going on. What challenges remain in the implementation of technologies by firms and companies?
That probably is the real question at the end of the day. Where's all this going? Is it helping improve audit quality? Is it making audit quality more sustainable? Is it protecting investors from our perspective? At the end of the day, in my mind, it all comes back to investor protection. And is this helping provide better information to investors from a financial reporting perspective, from an audit perspective, et cetera? And it's interesting. And I'll just say, again, these are my perspectives. Don't want to speak for the whole PCAOB with this. I think, as I mentioned, I think if we look forward to the next 3-5 years, I think we'll continue to see in greater use of technology across broader firms, a broader range of firms, a broader array of firms. There's a lot of things happening right now in the space. Huge, as many of you maybe know better than I, huge investments are being made by the major firms in technology, have been for a number of years, that continue to be. It's also changing kind of the look and feel of what an auditor needs, the skill sets an auditor may need to have. But in terms of the advancements and what we're seeing, it is an interesting journey where beyond theoretical, where in reality we could be moving, could be is a key word, in many cases away from a sampling approach where the auditor is looking at 100% or nearly all transactions, as opposed to a sample and extrapolating, as the case may be, like auditing was built on for 100 plus years. I think when you think about the benefit of that, if the data is good, the data is possible to get, that should help improve, one would think, overall audit quality. Recognizing there are a lot of challenges to get from where we are today to that world across a lot of issuers because of the data and whatnot and the various challenges. But conceptually, that would seem, I think I would believe, to drive improved audit quality. Looking ahead more broadly, Partha, things like robotic automation processes, RPA, artificial intelligence to a greater extent. Machine learning, I think, are coming into the more mainstream, if you will. We have seen examples to date where RPA, robotic processes, have been in place. Interest expense analytic bots have been used by certain firms or things like that by certain firms to assist with debt balances and interest expense and doing comparisons, what the RPA came up with compared to what was recorded in the general ledger, in the balances. We've also seen things around commercial loan audit tools to perform substantive tests of details or the allowance for loan loss. And these tools can be pretty sophisticated, using natural language processing and other digital technologies to ingest large sources of documentation from loan files and extract key attributes for consideration by the auditor based on parameters the auditor has designed. So we are seeing a lot of it right now. And again, going back to your specific question, if it's used right, if it's designed right, if the output is reliable, going back to some key premises with this, it should, and I think it has the capability to improve audit quality and make it more sustainable over time. But there's a lot of pieces to get to that point. And I think we're still seeing that from an inspection perspective in discussions with the firms now. I think some of the challenges around this, and you may have, I'll refer to another document, pardon me, that the PCAOB put out a few months ago back, I think it was in May of this year, our chief auditor, around work that they've been doing around technology and the task force. And one of the questions that comes up quite frequently, are our auditing standards, are the PCAOB's auditing standards prohibiting or inhibiting development of technology? Our view continues to be, the PCAOB's view is that's not the case, that we're not inhibiting advancements. Now, do our standards encourage technology? No, I would say they're fairly neutral in terms of the adopting or implementation of some of these tools. That could change over time. But we are focused on understanding, both from an inspection perspective as well as a standard setting perspective, what's being done, where the firms are headed, how it's impacting audit procedures, et cetera. And I think one of the other challenges to mention, part of this quickly, is kind of going back to the firms. Pardon me again. The firms are in different places. There's firms that are very, very far advanced. There's some firms that are really not doing any of this whatsoever. It hasn't changed. And there's firms all over the middle. And a lot of firms in the U.S. are waiting, if you will, are focused on the AICPA's tool that they're working on, kind of consortium, if you will, of firms, as I understand it. I think it's called the dynamic audit solution, the DAS, the dynamic audit solution tool, which I think will be coming out. I think it's being piloted now, coming out in the next maybe year or so, if not sooner. Now, when that comes out, that might provide a broader base for firms that aren't able to or are hesitant to make huge financial investments into some of these tools, that will allow them to advance more quickly across the board. Also, the customization of the tools, whether it's again in-house or that's acquired, the firms to varying degrees are customizing tools that fit their needs, which also raises some concerns about the output and how the firm controls what the tool is being used for. But I think on balance, and I'll pause with this part, on balance, it would seem that the tools have the capability, have the potential, if used appropriately with the right data, again, qualifications to drive and improve consistent high audit quality.
Thank you. Now, given that we are in a university setting, I would be remiss if I did not ask what skills the next generation of auditors should possess as more firms embrace technology.
You know, Partha, I'll tell you, let me say, I think right now, as we sit here, in my humble opinion, it's an incredibly exciting time to be an upcoming auditor. Things are evolving so quickly right now, and individuals coming out of a university setting, going to a firm, I'll say a firm of almost any size, but certainly the larger firms that are investing heavily. But again, I think that cuts across a wide range of firms. You're stepping into a very dynamic time that hasn't seen this type of change ever. So the skills, the ability, the capabilities are at a much, much different level. And again, will only be advancing going forward. But having said that, I would just say that while technology, broadly stated, is altering how the work is being done, how the audit's being done, it's not altering the purpose of the audit, the underlying purpose. So the need for the audit, the need for assurance services, I think is only going to be expanding in the future going forward. But how it's being done is rapidly changing. You know, things such as the full population of, just talk about the full population versus sampling could be a whole paradigm shift, if you will, in thinking going forward with what the audit is. You may have seen, I think it was a couple weeks ago now, one of the major firms came out with a lot of news about investments in technology, hiring 100,000 individuals focusing on artificial intelligence, cybersecurity, in assurance, outside of assurance. So very exciting times. And I know firms are making investments with universities to develop some courses on data analytics skills, STEM, the science, the technology, engineering aspect of master's programs in some cases, to provide a much broader background than just, when I came up many, many years ago, debits and credits and understanding the FASB statement, so to speak, in the auditing literature. The other topic I'll just touch on, because this is very forward-looking, but ESGs. So the skills of the traditional auditor, I think, are changing rapidly as we sit here. So I think data analytics is certainly a key aspect. Technological skills is a key aspect, in addition to the core nuts and bolts of debits and credits accounting will be important.
Thank you. That kind of is in line with all the academicians who are here attending this. So a lot of us are actually interested what kind of academic research in data analytics or modern technologies can be helpful to regulators like PCAOB.
Yeah, that's a great question. I appreciate the question. We spend, not only myself, but others in the PCAOB, probably more than I, truth be told, focusing on various academic papers around not just the impact of regulation, which is kind of front and center, the impact maybe of CAMs or other standards that may be at play with auditing or oversight or accounting. But it's something that we think about a lot in terms of what data, good research, foundational research in many cases that academics are doing can help us in our daily work and lives. So it's a great question. I think in this space, what I would offer probably maybe is two things. One is, and you might say, Parth, that there's 10 papers out there, George, go read the papers, but be that as it may, I haven't seen them if they are, but we're welcome to see them. One is related to professional skepticism. And is there an impact on the use of tools, the tools we just talked about, that either it helps or maybe hurts potentially, but probably helps the auditor's use of professional skepticism as opposed to traditional, what I'll call traditional audits. So one area, one topic that will be of interest, I think, to a number of us here at the PCAOB will be the impact of technology on the auditor's exercise of professional skepticism. Again, does it help? Does it hurt? Is it neutral? The other topic, I think, in my mind would be, I'll just mention quickly, is moving away from sampling. Kind of to your last question, Partha, about where's this all going? Does it help or inhibit audit quality? I have my views, but it'd be great to hear, from you and your colleagues' views. Is this, from what you're able to see, where firms, particularly the firms that are maybe more cutting edge in their tools, is it helping with audit quality? Is it helping provide a better product, if you will, to investors and other stakeholders from what a traditional audit might have been or might be? So those are maybe two things that come to mind pretty quickly, Arthur, to your point.
That's very good information for all of us, George. Thank you so much. So I'll take up questions from the audience now. Now, before I start it, I have to mute everyone first and then allow everyone to unmute themselves. So George, you may have to unmute yourself again. So the first question is that I see is from Dr. Brigitte Muelman from Babson College. Brigitte, can you please unmute yourself and ask the question?
Happy to do that. Thank you very much. George, this has been an amazing presentation. Really appreciate being part of it. One of the things that you just mentioned was ESG. And I was wondering, have you by chance seen any tools that have been applied to environmental data? And if so, how has the data been analyzed? What has been done with it? How did it fit into the audit?
A great question. I appreciate your kind comments as well. At this point, the answer will be no. And I say it in terms of what we see in the ESG space. Given where things are from a U.S. perspective, the SEC, depending on where things go, in terms of a lot in the press on ESG, the firms are talking about it. We would have to, presumably, we being the PC, we would have to write rules, standards around ESGs, whether it be part of the financial statements themselves, part of the filings, something else, the sustainability reports. So because of that, we haven't seen it to date. Probably the closest thing, but it's not really on point to your question, but I'll just mention it. In the oil and gas space, we look at a lot of oil and gas companies, and while it's not ESG specific, when you think about wells and reserves and how companies are looking and afford to think about reserves with estimates, et cetera, we do see that data, obviously, because the auditors are looking at that in terms of the underlying accounts today. That's probably the closest we would see in terms of any of this, but no, nothing in ESGs to date. I could envision, again, 3, 5, 10 years from now, it's a whole different answer to that question. But today, nothing. I think it's primarily because within the audit and under the audit opinion, as everyone knows, the ESGs are not part of it as of today.
Thank you very much. If I may ask for a very quick follow-up, when I think of environmental data, it totally connects to liabilities, to risk, contingencies and other things. I was thinking of that direction, be it emissions when we think about the scandals of past years, be it water quality, or be it biodiversity, which seems to be a very big topic these days.
Yes, absolutely. No, that's absolutely right. I agree with that. Thank you.
The next question is from Mr. Hal Schroeder, and then I have to do this. Okay, Hal, can you please unmute yourself? And Hal is from his board member at FOSB.
Arthur, now former board member, at least 8 days now. So
just retired from FOSB.
There we go. George, question about the migration of data into the cloud. You kind of touched a little bit on this in some of your earlier comments. Some of the sales pitches on moving data into the cloud were better security, lower cost, but the third leg of that was the ability to do better analysis as you took the silos down, the siloed walls down. What I'm curious about is, since we've had several years of that migration under our belts now, have you seen any changes in audit approaches, And more importantly, have you all changed any of your inspection procedures as a result of those supposed improvements?
Yeah, Hal, great question. We've go in reverse order. We've not changed any of our inspection procedures. The firms, I would say, again, the major firms, when I say the firms now to your question, have talked about, not maybe everyone, but a number have talked about moving to the cloud over the last few years, as you say. But that hasn't, at least at this point, changed or resulted in us changing our inspection procedures because of that. They have talked about, as you said, that it would facilitate better analysis or use of the data, if you will. And I think also, if I understand it correctly, to bring in larger amounts of data in-house to be able to perform procedures which support a number of the tools we talked about. So I think it is being used from that perspective, but we've not changed our procedures based on the cloud. Now, we have, depending on the nature of the file we're looking at, the nature of our questions around some of the tools has changed and morphed as we've seen new and different tools and doing different things to make sure we understand them. But nothing more fundamental than that, I would say, at this point.
Thank you.
The next question is from Dr. Elaine Moldin from University of Missouri, Columbia.
Thank you, Partha, and thank you, George, for your remarks. They're very fascinating. So one of the questions that I have is related to the standards, and you talked a little bit about the standards being, in your opinion, neutral right now towards technology, but perhaps in the future needing to change. What kinds of conversations about the types of changes might you anticipate in the standards?
Well, I think right now it's probably we're trying to work through that. This is more of a standard setting question, maybe inspections directly, but conversations we've had is we have a task force with various representatives on technology to understand not just, and we feed into that from inspections, but not just what we're seeing on inspections, but also what preparers are doing, companies, the firms are doing, and trying to synthesize, that data, and how should it, to your question, impact our standard setting process. The biggest concern to date has been, do we believe, now again, others may disagree with this, but are our standards inhibiting a firm? Would a firm say to us, well, you know what, if your standards were different, we could go so much further. We could improve audit quality so much more, but your standards won't allow us. Now, some firms, I believe, will probably say that. What we've seen internally, that's not the case, again, in the PCAOB's view. But having said that, there's been other individuals, to your question, have said, well, wait a second, the standards should be trying to encourage this. If we believe, to Partha's question, that this is going to drive or has the potential to drive improved audit quality, then my goodness, why wouldn't a standard setter say you auditors should be using this because it's going to help the product, if you will. Right now, we haven't, as we sit here today, haven't moved in that direction. Now, fast forward with different board members, different boards, things could shift maybe somewhat quickly. I don't know as I'm saying that, but I think it comes down to maybe some of that. And then I would say, just me, well, if we have a view of the auditing standard or standards should be encouraging, what does that mean actually? So, I mean, I can guess what it might mean, but if I'm a firm, and again, we think about the range of firms, if a firm can't make an investment, does that drive firms? I don't know. I mean, I think we'd have to think through all the permutations, the unintended consequences of what encourage might mean versus more of an evolutionary approach to this over time. So I'm not sure that's helpful to your question, but that's just some thoughts.
It's helpful. It is a complex question. And so I was just curious what your perspectives were. So that does help. Thank you.
You're welcome.
Thank you so much. And the next question is from Dr. Srinivas Raghothaman from University of South Dakota.
Yeah, I think Elaine already asked my question just now, so I will ask a different question. Are companies worried about releasing 100% data to auditors? Are they worried about the misuse of data or privacy issues? Are they freely sharing the data with all CPA firms? What do you think is happening there?
You know, that's one of the, from what we've understood from the firms, that's one of the challenges with this. You're spot on. And the way, at least in a couple cases, has been explained, it takes a series of discussions, if you will, from the firm saying, we would like to do these various tools or use these various tools in our audit. And to do that, we need, as you just said, Doctor, all the information brought in-house to the audit firm. And then it's a series of discussions from the audit committee to the CFO's office to general counsel's office because of the legal privacy concerns that may come into play, to the IT's shop, the information technology director and his or her group to understand what are the security controls, what if what if there's a hacking event at the firm potentially, or a cyber event there, and the data is all there. So my understanding, what we've heard is to go from that step to, yes, you can have the data. It's a series of meetings that the company wants to have for its own, I would say, for its own fiduciary aspect and responsibility to make sure they understand what's happening with the data, where it's being used, because obviously that the employees, the other individuals that have personal data are the company's responsible for. So I think it's a process that the firm goes through to get there. And my understanding, I would say, is in some cases they do get there, other cases they may not get there the full way. Again, I think it's probably more of an evolutionary, that'll take some years for various companies to get more comfortable with this process, given how new it is, if you will, from the traditional audit.
Thank you.
You're welcome.
The next question is from Dr. Sudarshan from IIM Kozhikode.
Yeah, may I?
Yes, please.
George, thank you for very insightful inputs. It is indeed great. My question is from the student perspective. I come from Indian context, where the students, when they prepare for a professional degree like chartered accountancy, they predominantly spend a lot of time on understanding the accounting and auditing related content. So my question is, as a person of being on the practice side, to what level of technological content should be taught or should be introduced? Like the way we talked about RPA or AI and ML kind of a thing. Or just to follow up on, so after completing the professional qualification, is it a separate topic of learning they should pursue to take up this career? Thank you.
Yeah, that's another great question, an interesting question. I appreciate that. Just my views on this only. I would say, again, just me speaking as I say this, fundamentally, I think the accounting, the business, the economics, the finance courses, maybe the legal courses to some extent for the CPA exam, whatnot here in the U.S., I think that's still foundational. But having said that, one could envision, theoretically, at some point that a lot of the basic accounting, a lot of the basic debits and credits will be automated, either through RPA type tools or AI, artificial intelligence. So the things that maybe that myself, back when I was coming up, through the university and the master's program, how to account for a lease, the debits and the credits of the lease accounting, well, that may be all to the point it's automated. So is that relatively as important as being able to do other things from an overall holistic view of what a skilled accountant needs to be or auditor needs to be going forward? Right now, I would say I think it's a balance. I think, yes, those fundamental accounting, auditing skills are still critical, economic skills, finance skills. But by the same token, when I came out, again, a lifetime ago and was using Lotus 123, I think it was called back then, and whatever Word was, or previous to Word, now I think, being able to use things like, Tableau or Power BI or other tools like that are across the board. I mean, certainly someone's not going to come out of school, I don't think. And if a firm has customized and internally developed or built something, they're not going to have use on that or experience, other maybe through an internship. But being able to have the broad foundation of manipulating large amounts of data, possibly very large amounts of data, being able to analyze that, being able to use some of the more tools that are widely accepted as a foundation for the analytics. I think that's the aspect of it. I mean, when you think about, if you think further out and you get into the first question about ESGs and whatnot, that takes us to a whole different level in terms of what skills someone might need and whether that's a different specialty, I don't know, over time. But I think having a foundation with technology and a comfort level, I would say as well, is a key aspect coming into the profession. That's my personal 2 cents.
Thank you.
You're welcome.
The next question is from Professor Ramanna from Javier Institute of Management, India.
Thank you. Thank you. George, that was a nice and wonderful presentation. Thank you very much. My question is the focus of audit changing from numbers to narratives? If yes, are there any standards on the narratives?
And I'm sorry, forgive me, changing from numbers to?
Narratives.
Oh, narrative, okay, yes.
Yes. So, and if yes, then are there any standards evolving in the audit of narratives?
Well, I think the answer is, my personal view is yes, it probably is evolving right now. I think if this is helpful, but come back if I'm not responsive. I think the ability of the auditor to interpret data, to analyze data, and how it impacts both the audit, how it impacts financial disclosures the company is doing, I think that will increase in importance going forward. We think about, ways that technology can help us be unpredictable, the auditor be unpredictable, to look for outliers, very easily look for outliers that heretofore the outliers were there, but it was like, as we would say in the US, finding a needle in a haystack. But using tools, 100% of the population could find outliers. I say that because I think that will help with the narrative and help with the interpretation of the auditor's work. And I'll pause. I hope that's responsive to your question.
Because we in fact, in India, we started aggressive conversation on the shift from numbers to narrative. So therefore, I thought, what is your experience on auditing? Because I feel that auditing numbers may be easier than auditing narratives.
I agree with that completely, yeah.
Thank you. Thank you very much.
By the way, Professor Ramanna is my first teacher in accounting from India.
Thank you very much.
Thank you so much, Professor Ramanna.
Thank you.
The next question is from Dr. Rajiv Dogar from University of Washington.
Thank you, Partha, and thank you, George, for doing the talk. One area where we know that traditionally there has been a fair bit of disconnect, and this goes all the way back to the expectations gap, right? Is that often accounting is not as complete conceptually as we'd like it to be. So there's considerable room for judgment, especially on classification issues and on how treatments are then applied. And previous regulators have often talked about how there is a rule hunting mindset, if you please, in which people parse the code, in this particular case, FASB or SEC, and try to get a preferred treatment or try to justify a preferred treatment for the client, right? Now that may be so, may not be so. We don't necessarily want to rule that out at all times. So I'm wondering whether, based on your experience, how often does an inspection, especially of a large, complex public company, surface such issues, and what is your general procedure for resolving these interpretations that might turn out to be controversial? Because I think how that is handled has a big impact on how people at large see the PCAOB. And as we know, with the regulator, optics goes a long way.
Right. No, that's a great question. That's a fair question, and I'll start by saying, to your point, when I think about what we do from an inspection perspective, we're in the judgment business, because almost, unless we have a situation where the auditor just didn't do something, it's like you should have sent confirmations out and you didn't, or you should have observed inventory and you didn't, which then it's very black or white. You just didn't do it. Almost everything we have, particularly now, 17 or so years into this, it's all judgment, because the firm did do something. Did they do enough? We may think no, the firm may think yes. So, who's right, who's wrong? And so we're faced with, I think, almost daily, quite literally, in those types of judgments. And we're then trying to understand, okay, firm, engagement team, what did you do? Why did you do it? Where's the documentation that supports your rationale? Does it make sense? Is it consistent with other things you may have seen in the audit or other press releases or public information, et cetera, as the case may be? But ultimately, it's judgment. So having said that, and then the auditor is also in the judgment business, if you will. Having said all that, coming back to your question, because you're right. I mean, I'll just say this, I'll come back to your question, whether it's ICFR related, which over the years has been a hot button issue, and the fact that an inspector or inspections has comment forms, as we would call the observations, in the report or not, or even an inspector just says something, firms react to that. And then when the firm reacts to that, then it may cause more audit work, it may cause more information from the client. So there's a supply chain of all this in many respects, in terms of where the perception of inspections, if you will, or the regulator. We in order to, I'll say, to try to be as focused as we can in trying to look at all pieces of the information. Because where we have to be careful, in my opinion, is when we come in, maybe depending on the time of the inspection, 6 months, 8 months, a year after the audit, and say, oh, well, based on all this information that happened 6 months later, you should have done X, Y, or Z. So here's your deficiency. Well, but a lot of that, in many cases, the auditor would have had no way of knowing when he or she signed that opinion. So yes, we look at that, but that's not determining in most cases, because there's no way the auditor could have known it. So what we try to do, and try to be very careful and very methodical with, is what did the auditor document? What was their thinking at the time? So when they were applying the standard, and to your point, many, if not almost all, the auditing standards are rules-based, which is fine. Some aren't, but a number are. So that there could be ways to do to establish a transaction to get a result, which is fine. There's no problem with that necessarily. But in terms of the judgmental areas, we try to understand what the auditor was thinking, what the company was thinking, what information the auditor had. Was the auditor looking for information that was outliers, that was not confirming, or were they kind of almost in a box where they were focusing on what was confirming only, and they didn't focus on other data points that would point to another outcome. So we look at how the auditor documented all that. So I'll pause there if that's helpful to your response.
That's helpful. I think the point about who knew what when is always crucial in these kinds of settings, because hindsight is 20/20, and in particular, this profession is one where we have to be very careful about not judging people based on after they've had information. Nonetheless, there is a perception, and it may only be a perception because most of us are not privy to the specific details of the auditor-client communication, right? And so the broader question, I guess, is that from your experience of doing these inspections, in terms of diffusing the idea that somehow auditors are not being as skeptical as they ought to be, not being as prone to facilitating client-preferred solutions, right? I think, and biggest issue, I believe, in credibility is that this lurking suspicion that the auditor is more prone to favoring positions espoused by the auditee management who may or may not be the client, and there is a long and very checkered history in American intellectual conversation about who exactly is the client, going all the way back to the O'Malley Commission and even before that. How do you as a regulator see your job of inspecting audits as being something that would help improve market functioning by alleviating this lurking suspicion? It's a very intangible thing, I realize, and this is really putting you on the spot. But this is, for me, the 8-ball, right? Because the goal of the PCAOB needs to be to improve market functioning by reducing this, what I may call suspicion friction.
Well, I think, no, that's a great question. And we could probably, I'd love to talk a little bit about that, because that's interesting. And you get into very quickly, which I won't go there, but I'll just say it, the pay model and who's paying for it. And that's also a very philosophical discussion, who should pay for the audit. And again, I won't go there on that point, but you get into also rotation questions in the long tenure of certain auditors with a client, again, which, not saying that's an issue by itself, but the perception, to your point, that all is part of the environmental aspect of this. But I think where we come in to your question, and I think where we help with this from the perception perspective, is we have public inspection reports. So if an individual, if one believes in the inspection process, and that's maybe one question, but if one believes in that, the fact that the PCAOB is able to produce a public inspection report on a specific firm, whether it's every year in an annual context or once every 3 years, as the case may be, and say, public, here are the results of our inspection. Here are part 1A now, part 1B, which is new findings. I think, to your question, that's how I would come at it personally, and I say that, and this is not to say the PCAOB is better or not, but a number of regulators outside the U.S. don't have public inspection reports. And I know there's legal issues, and I think one of the things that helps us in terms of, again, my views only, helping to drive audit quality, influence firm behavior, is the fact that we are going to publish, maybe not timely, I will admit, as it should be, but we do publish an inspection report by a firm name that says we've inspected, 35, 55, 50 issuers. Here are the areas where we believe, and the board believes, because it's the board's report at that point, that the firm has failed to obtain sufficient audit evidence to support its opinion. So now, if we have a lot, that gives one indication. If we have few, that gives one indication. So I think at the end of the day, that's how I would come to your question in terms of how we help with that. Is it a perfect answer? No, but I think that if I go back pre-PCAOB, the fact that we have the public reporting aspect, I think, helps with that relationship, as well as the fact that, and this would not be public, but we know we're, through ongoing conversations with the firms, they are reacting to not just the report, but to comments that we're raising through the inspection process, through root cause analysis or other things they're doing to try to get underneath some of this. But I think at the end of the day, that perception of who is the client, it's the audit committee, obviously by design, by legal, that's who hires the auditor, fires the auditor. But obviously, given the human nature of this, that question certainly still is there.
Thank you. I'll take you up on your offer to continue this at another time.
I'll look forward to it. Thank you.
Thank you.
Thank you, Partha.
Thank you, Rajiv. And the next question, George, is a tricky questions about the skill set of inspectors. And Dr. Hamilton Elkins from University of Saskatchewan is going to ask that question to you.
Hi, George. Thank you very much for this talk. It's been very informative. My question really, it goes down to CPA Canada has required to sit for the CPA exam, we call it the CFE here in Canada, has required an undergraduate data analytics class. And so my question relates to what you're looking for in skills and inspectors now that firms are using a lot of data analytics tools. How has that influenced what skills you're looking for inspectors? Because I'm imagining the firms are going to be looking for very similar skills in their future hires. And so this way I can kind of dictate the way I'm teaching my class.
Great question. I guess I'd preface it by saying heretofore, when we hire inspectors, we're hiring, generally speaking, folks that are at a manager level at a firm. Because the view has been, and this is also debatable, but the view has been, which I think does make sense, that, pardon me, if you've not done an audit or know how to do an audit, to come here right out of college or university and then do an inspection, try to learn an audit and inspection simultaneously is probably a bit difficult, if you will. So I say it to come back to your question. The folks we're hiring today typically are 6-7 years or more out of university. You know, again, probably typically a first-year manager or more senior. In terms of the skill set you mentioned, we do have a number of folks in the division that we've hired over the years that have a systems, an information technology background, and a number of those folks, either because they've done things on their own or because they had maybe unique roles at the firm before they came here, did have and do have a lot of that background. So we've kind of got it through the in-house aspect through that, more so than we've gone and looked at, can we hire a data analytics person? There are also other offices, the PCAOB, that have folks, not so much the audit skills, but have a lot of that skills that we kind of tap into from time to time in our Office of Risk and Analysis, et cetera. But going forward, I think those will be skills we will be very actively looking for.
Thank you. Because basically what I was, kind of hinting at is you obviously have some people in-house who have programming skills that you're utilizing in the inspections. And then since firms are using regression analysis, I was just wondering if you also would be targeting people who had some training in regression instead of just, picking it up as they go along.
If they're interested in joining the PCAOB, we're all ears. I'll say it that way.
Thank you.
You're quite welcome.
Thank you so much, everyone. And it was such a pleasure talking to you, George, and you have answered all the questions very satisfactorily. And thank you so much from all the academicians and from California State University, Sacramento. And I hope that all of you all enjoyed this session. And we had a lot of learning from things from you, George. Thank you so much, everyone. And we end this here. Bye.
Thank you all very much. Thank you, Mark.
Thank you.